Minutes after 9 o'clock. So I shall get the meeting started. So thank you, everybody, for joining this particular early morning Connecting with Capital event. I do want to share with you that these events are made possible by the sponsorship that we get from many organizations. And in this particular case, I do want to thank CDC Small Business Finance, Marble Bridge Funding Group, LendSpark, Primary Funding, United Midwest Savings Bank, Pacific Premier Bank, and Banner Bank. They all help out a lot and really support small businesses, at the same time supporting the Sbdc that helps bring these programs to you. The California venue grant closes today at 5 p.m. For those of you who are still looking to apply, please immediately after this meeting, make sure you do that. The San Diego County grant program is still open, and please also check with your appropriate city, because many of the cities like Vista and Oceanside also have some grant programs that are very, very, viable and available at this point in time. Support our local small businesses during this holiday season. Everybody can use a little bit of support. And of course, make sure that you shop diverse and you shop local throughout these holidays. So thank you very much. So as we get started, let me share a little bit of information with each of you about what the Sbdc program is. So for about 41, 42 years, our federal government has recognized that small businesses really are the backbone that creates the bulk of the jobs in this country, and therefore is the engine that drives our economy. But the government also realized that small businesses do not necessarily have all the same resources that large businesses can acquire. So with that gap in mind, the federal government back in 1980 created the Nationwide Small Business Development Center program. There are some 1,000 small business development centers all over the country, and in large part, they are hosted by institutions of higher learning, which is basically colleges and universities. Right here in the San Diego Imperial Valley area, we have 9 small business development centers. One of them is the Brink, hosted by the University of San Diego, specializes in technology commercialization. The second one is our Connect Sbdc, which also looks and helps scalable businesses get VC and or angel capital. The third one, which is also a specialty Sbdc, is our Export Sbdc. So as you look at your businesses and looking for expansion, remember that in addition to the private sector, you can sell in the government sector here within the United States, but there is also a huge market overseas. So our Export Sbdc can help you with that. Beyond that, we have 6 other Sbdcs spread out, one in the Imperial Valley area. There is one hosted by the International Rescue Committee. There's one hosted by the Alliance Sbdc, and there's one at Southwestern College and one at Miracosta College. So these are all programs that are available to you to be able to help you try and fill that gap that small businesses have compared with large businesses. So we do 2 major things. We hold a lot of events where we can disseminate the same information to many people at the same time, like this particular event. And in addition to that, we also provide a lot of confidential expert business counseling and advice. And we have over 100 Sbdc advisors here in San Diego. So please take advantage of the services that we provide to you. They're at no charge, because you have all paid for those services or are continuing to pay for them through your tax dollars, both at the federal and state level. So we are funded by the United States Small Business Administration, as well as California's Governor's Office of Business and Economic Development, as well as many other financial institutions. Many of you are going to hear from today, as well as our host institutions. So with that, I'm going to go ahead and get started. It's always a pleasure to have somebody from the SBA to be able to share some comments with you and with us, and be able to tell us what the SBA does and how it can help you. So with that, my pleasure to introduce Jamye Pritchett Solorzano with the SBA. Sorry about that, Jamye. Okay.
Thank you, Sudarshan, and special thanks to the Small Business Development Center incredible amount of work and support comes from the Small Business Development Center in Sedershin. We really appreciate your leadership and all of that, all of your staff members too. We couldn't do this without you, so thank you. We have a quick PowerPoint. I only have 5 minutes on the agenda, so we're going to go through and talk about the COVID-19 economic injury disaster loan. While it's still open, it's closing soon on December 31st. So we want to, this is the last pool to get anybody interested and capture any folks we missed. So yeah, so let's get right in there. Next slide, please. Okay, so we've had a ton of programs come out. The COVID-19 Economic Injury Disaster Loan, which I know many of you have heard about, is a loan. There is no forgiveness. It's a loan directly from the SBA that must be repaid. Low interest, fixed rate loan to help overcome the effects of the pandemic by providing working long-term capital to meet operating expenses. And I'm going to give you the cliff notes on it, the application process, where you apply, the terms, the difference between a new application and maybe some support for folks that might have an application already in and they're interested in requesting an increase, and the application details, the timeline, the accelerated timeline that we're talking about right now, and any requests for assistance. We're working those every single day. And so I want to know that we're available to you as well as the Small Business Development Center. Okay, so the application is an application that is submitted electronically online at sba.gov. If somebody is interested, I suggest they get together their federal tax return and all of their pertinent documents regarding the small business. Set aside a half an hour and try to submit that application in one session online on sba.gov electronically. Okay, so we're going to talk about the terms real quick. The awesome news is it applies for small business and actually our nonprofits. So the interest rate is 3.75 for small business, 2.75 for nonprofits, and a repayment period, which is awesome, of 30 years. There's also a deferment up to 24 months. And it's broken into 3 categories. So category A would be loans from $1,000 to $25,000. Category B, loans from $25,000 to $500,000. And then category C, those larger loans for $500,000 up to $2 million. So the credit score for the loans up to $500,000 is approximately 570. And then the credit score, required credit score, increases to 625 for those larger loans. And what's terrific about this loan is it can be used to support your business in so many ways, including operating expenses, payroll, rent, paying down commercial and federal debt, which is awesome, inventory, working capital. So a lot of uses on the loan. And if you're interested, please look into applying soon. And let's go to the next slide. Okay, so we have 2 processes here. If you've already, if a borrower has already submitted an application and they're interested in pursuing an increase to the amount they may have received in the past, what they're going to do is go into their SBA electronic portal. Do not submit another loan. That's the #1 thing we want to make clear. Submitting another application, a subsequent application, is not the right path forward. So if there's a loan out there, logging into the portal or contacting the SBA to request an increase is the steps that the user is going to take to request an increase. Now, for our folks that have new applications and they're interested in applying, they need to make sure that they go to that portal and submit a new application. So 2 processes. The initial applications for folks that are new to the COVID EIDL program, And then if there is an existing loan, go into the SBA portal and request an increase. Okay, so we're gonna, next slide, and we're gonna talk about some of the application details. Now, this slide is the timeline from when our program was first open. So the program is set to close for initial applications on December 31st. And I just want to make it clear, if you're interested in applying, the message is to apply as soon as possible. If you do have an existing loan and you need to get some support with a reconsideration or an appeal, then we will be processing them after December 31st or until the funds are exhausted. So like I mentioned, a couple of the forms that you're going to need to fill out or have with you is your federal income tax return 2019. You must have been in business the beginning of January of 2020. So we're looking at a 2019 tax return. And then there's also an IRS 4506T form, which authorizes the SBA to communicate and interface with the IRS and verify information. So that's a quick glimpse at the economic injury disaster loan. And again, if there's any questions, everybody is on this call right now to provide support. And I'm going to be available till 9:30. And then Sudarshan is awesome, and I'm sure he will send over any action items or any requests for assistance that anybody may need on this call or any of your borrowers. Thank you very much, and I appreciate your time. Thank you, Sudarshan. Back to you.
Thank you, Jamie. Ali, can you leave that up for a minute and go back to the slide before the last one? I have a quick question while Jamie, while Ali's bringing that up. So for somebody who wants to apply for a new loan, go back one more slide. There, right there. So if somebody is looking to apply for the first time for an EIDL and they want to apply, let's say for $600,000, do they have to apply for $500,000 first and then for an additional $100,000, or they can apply for the $600,000 right out of the bat?
Okay, so the first step, Sudarshan, is to get an application in there. First thing you're going to do is get an application in there. So depending on how the loan is issued, depending on the loan and how that loan is issued, it could be issued for, let's say, the $600,000. But what you want to do is get that application in there first. When the applications are approved, considering the eligibility, it is going to give you, inside the portal, it'll give you the maximum loan amount that you're eligible to receive. And then at that time, what you can do is make the decision on, okay, say I'm eligible for $200,000. You could take that loan for $200,000, or you could take the loan somewhere in between, depending on the amount of debt that you want to take on. So the number one thing at this point is, if you're interested, submit an application to the portal so that you can get consideration.
Awesome. Thank you so very much, Jamie. Be safe. Take good care. Bye-bye.
Thank you.
All right. Thank you, Ali. All right, folks, with that, we will move around and meet the wonderful, talented people who have joined us from several financial institutions. So some of the things that I want to be able to do is make sure that as you prepare yourself for some funding, know that there are a lot of things that a financial institution is going to need from you. And it's very, very important that you gather all that data and make sure everything is prepared. So in that preparation process, the Sbdc can definitely help you make sure that all the documents are there, because the truth of the matter is that unless you have provided the financial institution all the documents that they need, the clock does not start clicking. So if you keep feeding them items piecemeal, it delays the whole process. And to be candid with you, it may be frustrating for the lending institution to be able to constantly have to go to you for documents. So if you're serious about getting funding, please contact the Sbdc. We can help you prepare your package. We understand the needs of all the financial institutions that are here and others. So please take advantage of that so your navigation process is simplified and you're able to take advantage of the wonderful services that these financial institutions are going to provide you. So with that, I'm going to go around and ask each of our panelists to please introduce themselves and their organization and provide a brief overview of the lending programs that you provide, right? So with that, let me see, DeWitt, are you there?
Yep, good morning.
Good morning, DeWitt.
So I'm DeWitt with Pacific Premier Bank. I'm the first vice president of commercial banking. We're a large regional bank headquartered in Irvine, and we focus on business lending, real estate lending, construction lending. The programs that we have for business owners start at the very low end of $5,000, which can either be a line of credit, a term loan, and our lending goes all the way up to 100 million plus. So really every stage of a business's development from, starting off, once they've been in business for 12 months, we can start lending to them all the way up to, the business has grown to hundreds of employees, has multi-million-dollar financing needs. We can accommodate loans all the way up to 100 million plus. Our programs that start at 5,000 and go up to 250,000 provide expedited underwriting, expedited approvals, and the documentation required, it's relatively, it's pretty basic. It's a 2-page application for anywhere from 5,000 to 50,000. And from 50,000 to $250,000, it would be the same 2-page application with your most recent business tax return and year-to-date financials and a couple bank statements.
Awesome, great. That's a huge, breadth of loans that you make. And I really like the fact that the application process for the smaller ones is fairly simple, not too much documentation at that time. Thank you so very much. So let me go ahead and go to Roxanne. Roxanne, the same question for you. Please just introduce yourself and your organization and a brief overview of your lending programs.
Good morning. My name is Roxanne Rostamian. I'm the branch manager over at Banner Bank in Escondido. So we actually work with startup companies too. So we don't have that 12-month minimum, which is really great for some companies that are trying to get off the ground. We also have a stated income program. So up to 100,000, we don't require any financials. So it's an application, and that's for business lending and home equity lines of credit. We do focus primarily on business lending and commercial real estate. This ranges anywhere from term loans to purchase equipment, refinancing a building. Anything that is up to $1 million, you would be working with a branch manager. In this case, if you were to refer to Escondido, you'd be working directly with myself. One of the things I love about Banner is that we work very closely with our underwriters. So I actually communicate with one underwriter the entire time while working the loan. So we really have that community bank relationship, bank feel, which I'm a big fan of.
Thank you, Roxanne. So let me go ahead and ask that same question then from Melissa. Melissa, how are things over at your Wells Fargo?
Hi, good morning, Sir Darshan. Well, things are going really well. My name is Melissa. I serve the San Diego community, and thank you very much for having me here. I've been with the bank for 16 years. At Wells Fargo, we have unsecured credit products, lines of credit, and credit cards that go up to $150. We also do asset secured lending as well. We have a practice finance division where we dedicate special financing to healthcare professionals, where we do startups, acquisitions, expansions. We also do offer equity loans and equity lines of credit, conventional financing for investors and owner users. In addition, we do offer SBA financing, 7As and 504s, which include commercial real estate, startups again, acquisitions. So we do a little bit of everything. And again, if for whatever reason we're not a good fit, we do speak with a lot of people who are on the panel, and we'll make sure that you are well taken care of. Thank you.
Thank you, Melissa. And that's an excellent point that you make, folks. All these financial institutions, while they're individual organizations by themselves, they really are looking after the interests of you, the client. So if for whatever reason, what you are looking funding for does not fit their criteria, they do, refer you over to some other financial institution that might be interested. All right, thank you so much, Melissa. So let's go ahead. Fred, please go ahead and answer that same question. Introduce yourself.
Good morning, Fred Crispin. I'm with United Midwest Savings Bank. Myself, along with my son, manage the small loan division for the bank nationally. We're making working capital loans for startup and existing businesses, $20,000 up to $150,000 under the SBA 7A loan program. Probably a little over 90% of the loans we fund every month are for pure startups, meaning the day we fund is the day they're opening their doors to start selling widgets or services or whatever they do.
Awesome, that's great. Now, both Fred and Melissa and DeWitt, Roxanne, you all do SBA products. So I just want to share with everybody that the SBA, to whom we are a resource partner, and Jamie spoke to you from the SBA, they do not lend money directly to you. They basically provide a guarantee to one of these financial institutions who would then make the loan to you. So it's an SBA guarantee that is provided for a significant chunk of the loan that you may be able to get from a financial institution. Thank you so much, Fred. So with that, let me go to Juliet.
Hi, good morning, everyone. My name is Juliet Terman. I'm a business development officer with Accessity, and we are an alternative lending organization. So we're not a bank, we're actually a nonprofit. And so we receive money from different organizations, different banks in order to lend to people who are not yet bankable. So we have 3 different loan programs right now. One is a COVID relief loan program. It's for businesses that were in business and profitable in 2019, and they have been affected by COVID. So that one has a very small, minimum FICO score of 500. The turnaround time for that is about 3 days, and that is a COVID product. Then we have our regular program, which are broken into 2 different loan sizes. One is up to $8,000, and that's our rapid loan. And that one is a very low documentation loan. And then our regular micro loan is anything up to $100,000. So we have a lot of different programs, and I'm very eager to help everybody. So thank you.
Yes, absolutely, Juliet. We've taken advantage of, I mean our clients have taken advantage of many of the loan products that you offer. And I can tell you that the folks here at Accessity are always going the extra mile to try and help small businesses overcome any hurdles that keep them from getting the funding that they need. So thank you so very much, Juliet. So with that, let's go ahead and go to Fernando.
Thank you. Good morning. So I'm with Primary Funding. My name is Fernando Ponce. So we are also an alternative lender. We specialize really in asset-based lending. We like to leverage ideally your accounts receivable or a purchase order that you have potentially to fulfill with a with a larger client maybe. That's really where we are going to excel, but we will get creative and we'll take any assets we can if it makes sense. We'll leverage inventory. We'll leverage real estate if you own a home that you're willing to put up as collateral. So we just try to figure out ways to get it done, and we work with many of, if not all of the banks here on the call today. So whenever they can't do something, we're possibly an option, and then we work with you to really try to get you back up to bankability ultimately, right? So we don't have contracts. Everything we do is month to month, and the idea is that we work with you, and hopefully we can potentially refer you back to the bank that originally sent you to us to get a more traditional banking product.
Absolutely fantastic. Fernando, of course, one of the things, everybody who's on here, please remember that when it comes to asset-based lending, it basically is talking about that you have to have in the business or some other place, some assets that can be used as collateral. And we will talk about that in a minute, but accounts receivable financing is a great way of doing things. So thank you. So with that, let's go ahead and go to Miriam. Miriam.
Hi, Sudarshan.
Good morning.
Good morning. So at CDC, we've been around for 40 plus years, and we are also a mission-based nonprofit lender. And so our focus is on startups. About half of the loans that we do are startups. We also focus on helping any minorities, African-American, Hispanic, veterans. If your business is located in a low or moderate income area, we have some special loans. Of course, we have our SBA loan as well. And that is just for anybody, right, that qualifies. And then our other impact loan programs, if we're on the edge of whether or not we want to approve you. And, if you fit one of those items I mentioned, you're a woman, you're a veteran, you're a minority, that we're probably likely to say yes. So those are some of the things that we specialize in. And I see our loans are from anywhere from 20,000 to 250,000 is our max right now. They're not necessarily collateralized. The smaller loans are not collateralized, depending on the circumstances, on whether or not your application is strong or not. You may not need to collateralize your loan. And the use of proceeds that we do are for working capital, inventory, refinancing business debt. What else? Acquisitions or startups, existing businesses, those are our use of proceeds. And just as an FYI, I get this question a lot. A lot of people think that because we do SBA loans, we also handle the EIDL loan, and we do not. So that is what Jamye, actually the SBA, directly handles the EIDL loan. Only in a state of emergency does the SBA actually lend themselves. And so of course, COVID was that. So, Jamye and the actual SBA is the one that handles the EIDL loans. But that being said, I get a lot of questions as well on people saying, well, I already have an EIDL loan and I have a COVID loan as well. And I had a PPP loan. Can I apply? Yes, as far as in our lending, it's okay if you still have an EIDL loan. It's okay if you're applying again with, SBA. As long as you still qualify and you're able to show that you can repay the debt that you're requesting with us, then we would still be able to lend to you. Our interest rates are as low as 5% and they're as high as 8%. So like Sudarshan said, and I believe Melissa said, we all know each other here on the panel. We all work together. Our best interest is your best interest. So it's not about whether or not we do your loan. It's about helping you find a home and guiding you to whether we can help you now or maybe later, or maybe, hey, there's Melissa at Wells that can help you now, or Banner Bake Melissa, whatever it might be. So yeah, that's what we're about at CDC, and we partner a lot with Sbdc. I know I'm always talking to Wes or Joel, and we're going back and forth with referrals. So we really appreciate you, Sudarshan. You really help my clients get their package ready and fundable. So I appreciate everything you do and your team does.
Thank you, Miriam. And that's a great segue to the next question I have for each of you. Remember, folks, in the end, a bank has got to, do a pretty thorough due diligence to make sure that any money that they lend to you, which really is not even theirs because they're getting it from different resources, many times it's the depositors. So they want to make sure that, you as the borrower, whether it's you, your organization, or both of you, have the capacity to be able to service the debt, meaning that you're able to repay the loan and the interest on it. So with that, let me go ahead and ask you the next question. And that question is going to be the same for everybody. What does it take to get funding from you, credit, collateral, all that kind of stuff, years in business? So I'm going to go ahead and get started with Roxanne on this question. Roxanne.
So there's no cookie cutter answer for that. One of the benefits of being a community bank and being able to work with underwriters is we really look at the whole picture. So we're going to look at credit, obviously, operating and income, but we'll also look at the health of the guarantors. So more of a personal net worth. Like you mentioned, collateral always goes a long way, but it's not necessarily a turn down if you don't have collateral. So, my job as to help you put the application in is to really understand the business and how you are going to make the operating income and portray that to the underwriter. So like you said, the best advice I can give is to have your financials ready, the balance sheet, P&Ls. If you need a referral to a CPA to help you organize that, I'm sure all of us on the panel have people that we work with. Yeah, so there's no cookie cutter answer, but we try to look at the whole picture.
Thank you, Roxanne. And you made an excellent point. Your financial information is like a lens that peeks into what your business is all about from a financial point of view. So it's very important that not only do you have that recorded correctly, but contemporaneously. It'll be terrible if you go and ask a bank to give you some funding and then you haven't filed your 2020 tax returns, right? Or that you don't really know where you stand at this point in time on November the 18th or 19th about how your business is doing so far. So very, very important point. Thank you, Roxanne, for sharing that. So Melissa, I will ask you that same question then. What does it take?
Well, very similar to what Roxanne just said, having updated financials is extremely important. Being able to understand the request, I think that's another really important key. So if you're looking for a line of credit or a loan, being able to speak to why it is that you need that capital and what is the intention for the capital. For people who are looking to purchase investment properties, we are cash flow lenders. So it's important that that property is occupied, or at least you have leases in place, where people are going to be occupying that property. But most importantly, I think really having a business plan, if you're looking to do an acquisition, an expansion, if you're looking to leverage SBA, it's really important to have that business plan. And really come to the bank with plenty of time. So if you know that you're looking to purchase commercial real estate, it is important to get pre-qualified, have a good understanding of, how much can you go in, what is your down payment requirement. So being proactive, I will say, is extremely important. Connecting with the Sbdc, looking to understand, what financial institutions have, we all have different appetites, and some of us are, able to potentially finance, for instance, 100% of your real estate purchase if you are a doctor. And so depending on the strength of the borrower, I think it's important to, again, connect with the Sbdc to really understand who would be the best fit for you.
Awesome. Thank you. Thank you, Melissa. So Fred, same question to you.
All of our loans are funded under the SBA 7A program. It's a credit scored loan program. Both ourselves and SBA use the Fair Isaac small business scoring model, better known as liquid credit. That model is looking at a lot of different things, but it's heavily weighted to your personal credit, along with the industry risk that you're involved in. In other words, it's going to look at a startup restaurant entirely differently than it looks at a startup veterinary clinic. Why? I think we've all seen restaurants go out of business every day, but very rarely do you see a veterinarian go out of business because it's got one of the lowest default rates of any industry out there. So it's looking heavily at that. It's looking at your time in business. Startups go through a startup module, which is tougher than the module that somebody that's been in business more than 2 years goes through, because the highest default rates in small businesses occur in those first couple of years. It looks at how many people actually pulled your credit. So be cognizant of going out and buying a car, for example. Car dealers are notorious for shopping your credit all over the place. And every time they do that, that's another credit pull that will drive your score in the model down. So be very cautious about letting people pull your credit. It looks at, we look at the percentage of revolving available to you. Are you maxed out on all your credit cards? Or do you have some fallback room that if you got in trouble one month, you could bail yourself out? So those are the main things that model is looking at. There are a lot of other things that go in there, but those are the primary things. From a collateral standpoint, we take a lien on the business assets, and that's it. So in most cases, the loans that we're making in this small loan product are basically unsecured. From a collateral standpoint, an example would be a Molly Maid franchise. What are they going to have? A couple of vacuum cleaners and some dust mops. That's about it. Not something that a typical lender would be comfortable loaning against. But we believe that if you properly capitalize that business, then they can go out and generate sufficient income to pay us back. So for most cases, they're unsecured loans.
Thank you. Thank you so very much. Let's see here. All right, with that, let me go ahead and then go ask the same question of Juliet.
Yeah, it really depends on the type of business you are. So for a startup business, we're going to need a business plan, and we do have templates for business plans that we can send to you, and you can fill in. It's very basic and easy to follow. So for a startup business, you are going to want to make sure that you have another source of income as well. That's very important because the loans are personally guaranteed, meaning that if you sell the business or you stop the business, you are still personally liable to pay that loan. So it's important that you do have a source of income. You don't quit your day job, or you have a spouse who can come on the loan and support the payments. Those are all very important things for startup businesses. Now, I did mention with our COVID relief loan, we do have a minimum FICO score of 500. With our regular loan program, we do not have a minimum score. The FICO score that you have actually goes into determining the interest rate that we offer, which is between 6.99 and 14.99%. And like Fred said, and many of us are going to say, these loans are unsecured loans. And so for us, when we are lending to startups, the risk is a little bit higher. And so the interest rate can be on the higher side, but we did just lower them recently. So that's exciting. As far as collateral, we do use paid off cars as collateral. So any sort of vehicle that's paid off, if it's a work vehicle, personal vehicle, we can also use third-party vehicles. Those can be used as collateral. That actually is another factor in determining the interest rate. And then as far as existing businesses, the financials that Roxanne mentioned, right? Having your financials in order, being able to provide a year-to-date profit and loss is going to be very important, as well as a balance sheet and your taxes from 2020. So, you'll hear some repeated themes in these answers, but it's all very important that you gather these things together, that you know where your taxes are, that you can contact your tax preparer. In the summer, I dealt a lot with individuals who their tax preparers went on vacation. And so we had to wait and put their loans on hold until they were able to contact them when they're back from vacation. So just important that you have copies of your documents in your possession, I think, is always a really good, even having a folder on your computer is a really good thing to have when you're getting ready to access capital.
Thank you, Juliet. And with that, I would emphasize that it's very important to have a business plan, even if a financial institution doesn't ask you for one because you've been in business. My feeling, having been in business for many, many years and a business advisor for a couple of decades, is that not having a business plan is certainly a plan for failure. So make sure that you work, with your Sbdc business advisor. And many of these organizations have a template of a business plan. Accessity certainly does. It's very, very simple, and we utilize that. One of our business advisors helps people populate that one also. So thank you so very much. So with that, Fernando, asset-based lending, tell us what it takes to do business with you.
Yeah, we're definitely far more specialized. I mean, the financials will help if there's a deal on the bubble or something like that. But really, we're looking for what assets we can leverage, right? And what's going on right now. So if you've landed some large contracts and there's a discrepancy in what you've done maybe the past year, maybe you had a bad year in business, but now you've got a bunch of contracts and you're ready to really move forward and hit some numbers. That's where we're probably going to be the most useful. Personal credit is not really an issue for us. I mean, unless you're kind of like behind on everything right now, and they're taking your, all your property and things. Like if you're going through a bankruptcy or something like that, that'd probably be a scenario we'd stay away from. But if you've had credit issues, if there's some cash flow issues in the business, that's not going to be as big of a concern for us as long as we have the appropriate collateral. So specifically with accounts receivable, if we can see that you have completed work that's done and you're just waiting to get paid on that, you need that capital now to continue to operate, pay your employees, cover other overhead, your suppliers, things like that. That's something we can monetize and help you to keep your cash flow cycle moving forward. So again, for us, it really just comes back to what's going on right now. Are there some good things happening in the business, and are there assets that we can leverage? And as I mentioned earlier, we will go outside of the business as well. We won't take vehicles, but we're going to take real estate, We can also leverage, we're just doing another deal right now. We're leveraging somebody's whole life insurance policy that they've got a good cash value built up there, and we're using that as collateral. So we'll get really creative. If you have some good assets, we'll try to make it work and figure out a way to get it done.
Awesome. Thank you, Fernando. So Miriam, tell us about what it is that you need to get somebody some financing.
Yeah, so for us, our package looks a lot like a bank. However, our underwriting is a lot different than a bank. So other than the basics of making sure that your business can cash flow, in other words, that your business has the ability to repay the loan that it's requesting and then continue to pay for its own business expenses, we're also looking at you personally, to make sure that you also personally cash flow, so that without our loan, you're capable of, paying for your mortgage or your vehicle or your groceries. So we look at those two things, which is pretty typical of any lender, right? Want to make sure that you can pay us back. And then we also look at your credit score. We want to make sure you're at least at a 620. Depending on the size of the loan, if you have a bankruptcy, it can be anywhere from 3 years to 10 years, depending on the size of the requested amount that you're asking for. So as far as any hiccups you might have on your credit, we're not necessarily looking at past hiccups more than that you're currently current with everything. So if you're asking for more debt, we want to make sure that if you had a collection, you've paid it off, or you've made a payment plan or something of that sort. Other thing that we're looking for, we do in our make sense kind of thinking, is we don't have necessarily any restrictions on any industries. So we're still helping, believe it or not, restaurants. I funded a gym, a couple of gyms actually that Wes sent to me from Sbdc. So the only thing is, obviously we are being, making sure that we're thinking it through and that it makes sense, and the clients has made it through as well. But other than the normal, we do SBA loans, so we don't accept any adult industry or anything having to do with COVID or CBD or anything having to do with marijuana or CBD or anything of that sort. But yeah, that's kind of our thinking, other than our minimum of 620 credit. It really, doesn't make sense. We don't have a lot of guidelines, more so does it make sense that you have the ability to repay us back? So for example, we do a lot of projections based lending. So as I mentioned before, we do a lot of startups, we do acquisitions. So I remember a long time ago, I had a client that came in with me, and he showed me a tax return for the previous year, and it was 250,000 negative, and he was asking for 200,000. And so were I in my banking days, I worked at the bank for a while, I would have said no, like no other look at anything, no explanation, just come back when you're profitable in 3 years, right? When your gross revenue is growing and your net income is growing. So at CDC, I was able to ask more questions and say, okay, what's going on? You said you have 20 plus years of experience and you're 250,000 negative, and you're asking 200,000. Like, that doesn't make any sense, And so he said, well, actually, I had a business for 10 plus years. My spouse got cancer. I had to pretty much let go of my business, and now I'm starting over. But I have experience. He had okay credit. He's like, I have connections. Here's a contract for $1 million. And so we actually ended up finding out that he needed more than 200,000, and we gave him 250,000. So if it makes sense to us, what you're coming with us and your experience, yes, it's possible, as long as you, of course, cash flow.
Thank you so much, Miriam. So time flies when we have these meetings. It's almost already 10 to 9. So what I'm going to do is I'm going to kind of ask one question of each of you. And if anybody has to add something to that, you'll be able to do that. So with that, Miriam, you already talked about the kind of businesses that you would lend to or not to. So would you like to add anything to that as to which businesses that you might lend to or not lend to?
Sure, there's not many types of businesses that we wouldn't lend to. All the kind of ones that are the usual suspects, cannabis, we wouldn't lend to. Aside from that, there's not too many others that we have a hard, fast rule that we wouldn't lend to. So hospitality will lend to, restaurants, hotels, anything that has to do with the entertainment industry will lend to. The most important thing though for us, once you request anything that's above 100,000, the most important thing is definitely cash flow, just making sure there's enough cash flow to safely cover all of the debt, leave a little bit of wiggle room just in case expenses go up, profits go down. So that's really the most important thing is cash flow once a business wants more than 100,000, but not too many that we wouldn't take a look at.
Well said there about cash flow. Cash flow, folks, is king, queen, monarch, whatever you want to call it, because cash is what drives your business. You can make all the sales, but if you do not bring the greenback back home, you haven't really done anything. Same thing with your inventory. If you got too much money tied up sitting there and are looking for more funding, well, you've got to take a look at all those kind of things. All right. So please do reach out. Sbdc has experts who can talk to you about how to release some funding that might be tied up within your business. Just because you have a lot of accounts receivable, maybe an indication that you haven't been able to collect them in a timely manner. So with that, let me go ahead, move to the next question. And in the essence of time, I'm going to ask this question. What two things can you give attendees to successfully access capital? And I'm going to ask that question from Fred. Fred? Fred, you're muted.
The first I would say is make sure you know what's on your credit report because it's a credit scored loan program. So credit's extremely important on the front side. Make sure there's no erroneous information that's in there. Outside of that, have a business plan. We're not going to ask for a copy of it, but we're going to have certain forms you're going to have to fill out. If you've written a business plan, you're going to be able to answer those questions real quickly. So those are the two primary things from our standpoint.
Thank you, Fred. So if anyone else has anything they want to add to that, please feel free to unmute yourself from the panel and add whatever you have. Or raise your hand. That way I'll know who's wanting to ask the question. All right, Fernando.
Sure. So, I mean, number one, obviously, as my advice is always work with the SBDC. They're going to know all of the lenders on this panel inside and out. And every time that I've received a referral from the SBDC, it's always been a good fit. So I think we're at 100%, close rate when we receive referrals from the SBDC, which is, I don't get that anywhere else. So so that says a lot about the way they work with the clients. And then just really be upfront. Everything's going to come out in the process, right? That's why we have a process to putting loans in place, because we need to do our due diligence to ensure that we're, it's a good risk, right? All loans are a risk at the end of the day. And it's just that every lender has a different appetite for how much risk they're willing to take. So it's not a matter of you trying to omit what you think, is going to keep you from getting a loan. It's really a matter of you finding the right lender that's willing to take the risk that you present and put that loan on their books, right? So if you're upfront and honest about these things and you find the right fit, it's going to go a long way towards you getting the right loan as opposed to trying to, fool somebody into lending you money.
Awesome. Thank you. With that, Melissa, I'll ask you the question. Can you please share a recent lending success story and why you were able to make that loan? And please keep your answer as brief as you can.
Thank you. Well, we recently closed on a doctor who is doing a startup here in San Diego. It took some time to go ahead and get the permits in place. He had a consultant who helped us, make sure that all his paperwork was in a timely manner because he was busy still working at the practice, at his practice. And then now he's going to be working a couple of days there and then taking over the practice that he's starting up. So we were able to help him with the working capital. We were able to help him with his marketing and, of course, provide him a line of credit and credit card for cash flow purposes. So really excited for the doctor. He opens his doors here early next year. And so that was someone that we recently helped.
That's awesome. That was an expansion. You grew from one to another additional, location. And of course, he met all the criteria. He showed experience, he showed past profitability, he had the professional expertise to be able to do it, and probably had pretty darn good credit and collateral to go with it. So all those things come into play. So thank you so very much. So with that, let me ask the next question, which is a very important one again, is what is the one thing that you think somebody should never do if they're applying for a loan? So for that question, let me go ahead and go to Roxanne.
I think it was Fernando, Fernando that said it, just be upfront. Don't try to hide things or sugarcoat things or walk in blindly, just asking for, $300,000 for you don't know what. Like I mentioned before, it's my job to create the story for the underwriter on why we should lend the money to the business. So just being honest and upfront. So no hiding anything, because it's all going to come out.
Well, that is so, so very important. Look, folks, if you hide things like, oh, I had a bankruptcy or something like that, or I had some other challenges, or a lawsuit is filed against me, those things are going to come out. And if that comes out and you haven't informed your banker about it, well, that's pretty much a deal killer as far as I can see, because these folks are very, very busy. They have many people who are seeking funding, and they want to be able to work with those people who can provide them truthful, accurate, and timely information.
Not only
Right.
being busy, but it's just a relationship between the client, the banker, and the underwriter. So you just want to be honest and open so we can, we can get over those obstacles in the beginning rather than have them come to us, afterwards.
Absolutely. And these folks are in the business of lending money. So just convince them with all the information and documentation that they need that you are a bankable client. So with that, I do want to thank the panel for all of you for participating in here, but I do want to take some questions that might be out there because time is short now. Ali, if you will, please let us have the first question.
It looks like they have responded to questions as needed. We didn't have that many. So if anyone has a question that's kind of top of mind now that you'd like to ask, you're welcome to, but nothing in the chat so far that hasn't been addressed.
Okay, well, that's fantastic. It looks like our panel did a good job. And so if any of you who are, as a participant out there have a question, feel free to raise your hand, unmute yourself. I would love to take your question. Yes, go ahead, Maya.
Would it be possible for Miriam to put her contact information in the chat?
Miriam, yeah, absolutely. So just remember one thing, I would guide you. You can certainly reach out to Miriam, but are you working with an Sbdc advisor?
Well, I am, but I'm actually in Long Beach, so it's not a San Diego Sbdc advisor. Okay,
In Long Beach, Miriam, the CDC covers that area too. Miriam has provided some information right here in the chat box.
Excellent. Thank you so much.
Okay, and Maya.
Thank you. Hi, my name is Maya, and I have a small business. But right now, to keep funding it, I'm doing like odd jobs. Like I do DoorDash, Uber Eats, Grubhub, and Instacart to maintain my income and kind of feeding that into my business. Is that something that's viable income when trying to get help?
Well, let me see. Let's have maybe.
It is.
Go ahead,
so
Mary.
I can answer that. Yeah, it is viable income for us. I don't know about the banks, that they might be a little bit more strict, but yes, it's definitely viable income for us. Even money and savings is viable income if you're a startup. Spouse's income, disability. I mean, pretty much everything for us is income other than something that's temporary, like unemployment income. So that would not be considered income.
And how about you, Juliet? Would you consider that as income too?
Yeah, I just want exactly. We would consider any source of income that's coming in consistently as income. All of those odd jobs. We have lots of clients. Excuse me. We have lots of clients that they're doing all of the jobs that you mentioned. So yes, it's definitely a source of income for us.
Thank you. Yeah, at the height of the pandemic, I really had to switch gears like everybody else. And then trying to work full time, do everything with the business was pretty complicated. So I had to figure out a way how I could earn income, but not be stuck in the office. So thank you for answering.
Awesome, folks. With that, we will be concluding our meeting. I do want to thank not only our panelists who are always dedicated and available to share some wonderful information with you folks. And of course, all of you, the participants. Remember, entrepreneurship is a viable opportunity if you do some analysis and make sure that the business you're embarking upon has a consistent demand for your product and your service at a price which is greater than the cost, because in the end, you want to be able to make some money, right? And then all these folks here have the same end in mind. They want to be your partners in helping you get the financial resources that you need so you can overcome the barriers that are keeping you, the small business owner, from achieving your goals. So with that, many thanks for being here. The holidays are coming. Be safe, take care, and we look forward to helping you. Reach out to the Sbdc. Many thanks and have a good one.
Thank you.
Thank you all for your help.
You're welcome.
Have a good day.
Take care, Beth, Fred.
Thanks, everyone.
Bye-bye. Ellie, will you lock the meeting off? Thank you.
Sure, I will. I just want to make sure Gloria has info.
Okay.
She's waiting for Kelly. I think you're good, Gloria. Feel free to just email me there if you need.
Have a great weekend.
Thanks, everyone.
Thank you.
Bye-bye.
Thank you, Ellie. Thank you, Len. Bye-bye.